Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I am Cody. He is Andy. It is November 5th. Big election day today.
Election day.
Big election day. Did you get out there and vote?
Yes, I did go out and vote. Did you go out and vote?
I did. They asked if I wanted one of those Go Vote stickers. I took 2.
You took 2?
Yeah, I took 2.
Well, somebody doesn't get their Go Vote sticker, courtesy of Cody.
Should have got out there earlier. She asked if I wanted one. I said, yes, ma'am. She turned her head to the other side, and I took 2.
This is America. I'm taking 2. You know what I was thinking about doing, by the way? I was thinking about writing your name in.
You should have.
How old are you?
34.
Oh, so that wouldn't have worked. You got to be 35 to be able to be president.
Well, 4 years from now. Just give it 4 years.
Okay, so next election, Cody, 2028. We'll start campaigning. I got to get we got to get like a sticker or something like that. Start with there. I can't believe you took 2 stickers. All right, so yeah, I can.
Let's do it.
I'd say this is probably the one that gets talked about the most in our office right now. I feel
right
like
now.
At least. I've had several people reach out to me and ask, did we go and fill this gap? And I mean, short answer is yes, right? I mean,
we did.
That much is clearly true. This is a weekly, so today's Super Tuesday. Is it Super Tuesday? I don't think it is Super. Is it actually Super Tuesday, or is it just like Presidential Election Tuesday? I forget the difference.
It's also the NFL trade deadline today too. So like we have today is a big day.
It's a huge day then.
Big day.
Huge day. Packers going to win the Super Bowl this year?
I hope so. I probably got pneumonia from the game on Sunday, but I'm still here.
That's all right. You're still here. You're still looking at charts.
I care.
Assuming we close here this week, right? Which is still a big F. I mean, it's only 2 days in, but this has filled this gap already, right? It's just a question of it close to that gap. And to me, I mean, this is just, look at all of this that we left behind right here. And really, I mean, I think you have to focus on this right now because this was that bull flag that we talked about that propelled us. And then since then, what's interesting about this too is that if you just look at this stuff right here, this was the best that the bulls can put up after, I mean, this was like a monster break in a very short amount of time.
Right.
Going from, 241 down to 189 in 3 weeks. Boom. And this was the best that the bulls can do. It's this little bump back to 197 and back down below that price 2 weeks later. So not a very positive response out of the bull side, your favorite side, the left click side.
And now I was talking to a couple of folks this morning, you've got 2 massive gaps on this chart. You got one at $1.65. You've got another one at $2.20. And the big question is, which one do we go fill first? I hate to say it, but I think it's $1.65, and I don't think it's going to be a quick trip.
It sure feels that way, doesn't it?
It feels like it's going to be just a brow-beating bleed out to $1.65.
Could be. Like I said, you've cleared all this. This was the best that the bulls could do.
Yeah.
And then now you've got clear momentum in favor of the bears right here, right? We crossed zero. First time that any sort of, not only did we have a cross, but I would call it like a material cross because it didn't bounce right back in, right? Like right here, it was kind of choppy. We crossed it for like a hot minute and then went right back up. But here, like it's a clear cross, right? And then continuation of that. And so if you just look at the momentum piece of it, momentum, it's a secondary indicator, but it still does trade technically, right? And so you want to be mindful of there's room for this bad boy to go, especially if it breaks this, then you've got room to go. But this also tells us too that there's room down to where this gap is, which is, dare I say it, 166 and some change is where it gets filled.
Exactly.
So I would agree. This is no bueno, and it looks like it's got some more room to go in this gap. Would be kind of like a target, almost like a magnet.
Exactly. I was asked the question, which one do you think gets filled first? I truly believe it's $1.65. And like I said, it's not going to be a quick trip. I think it's going to be a grind.
Yeah.
It'll be a grind to $1.65, $1.60 down there. We'll probably sit there because after today's GDT, that was pretty positive. Check out a podcast with myself and Mr. John Spainhour talking about the global dairy trade, but their price now at $2.26, I think it is for cheddar cheese. We're at $1.81. The discrepancy is getting larger. The way that we usually do it is we go down too fast and then rebound our prices. And same thing, vice versa on the high side. But I feel like this is going to be a long, drawn out couple months of a downward trend.
Sure. Short answer is yes, right? And then you start to get into the question of to your point, you have the solid Oceania price, right? At least from what we just saw. Now that could obviously change in 2 weeks. And EU seems to be hanging in there in terms of their cheese price. So how much of a discount can we really maintain for how long? All those things start to come into conversation too, the lower that we go. But again, we're just looking at charts. Assuming we get a close here this week or lower, You got to think that this gap is very much in jeopardy of being filled. There's room for more weakness out of the secondary indicator, and there's obviously more room for this to break on the actual underlying itself. So, and it's, you think about like a seasonal standpoint, it's getting to be the right time of the year, right? I mean, holiday stuff bought and paid for are getting really close if you're not already. And so what sort of seasonal demand do you have after that? It's maybe if the Packers make the Super Bowl, you buy all the cheese in the world and you're just like, that's it. Like, we're going to have the biggest party known to man, and Cody's going to have pizza for everybody and 2 stickers, not just pizza, but 2 stickers for everybody.
Living the high life. They changed the stickers, so now instead of I voted, they've kind of, I want to say, got with the times. 2 of them that I stole say, oh, I voted. It's like a Midwestern, like, oh, excuse me. Oh, I voted.
Yep, I voted.
It's 2025 here. Catch up with the times.
What's your sticker going to say? Like, Coster, whomever, running mate. Like, is it going to say, what's it going to say?
A vote for me is a vote for you.
You've already got your slogan picked out? Like, I mean, I'm excited. Coster, 2028, he'll be able to be president at that point.
Load it up.
Everybody's getting a pizza and 2 stickers. Let's go. So what's interesting is that, like, not only do we have room to go in the cheese chart, but we've started to see our next chart, which is also something that was coming at request internally from several folks, is the December Class III has not been shy about maintaining a discount to current cash.
I think we talked about this last week also, right?
When I talk about current cash, I always think about, like, I just checked the spot number real fast, like $18.92. Call it $19, but like, you also want to add in a little bit of premium to the NDPSR, especially the lower we go, if you like. So you want to add in a little bit of premium, right? And so, like, if you believe that we need to add at least, like, call it 3 cents, December is trading at a very slight discount to current cash, implying that spot has more weakness to go. If you're a new seller of December here at 19.16, you believe that cash is going to continue to go down, and like the NAS will continue to go down too, NDPSR. But this chart just by itself, I mean, it's at a point where this is where it really started to take off, right? It took a little dipsy-do right here and then just took off. Getting through that, yikes. I mean, you don't see a lot of relief until you get down into here.
No, the only relief I will say that I see is on the RSI chart.
I agree.
We have seemed to bottom on the oversold territory.
You have officially crossed into oversold. Now, you can spend a lot of time overbought or oversold right here. This was late August to call it close to a month. Not quite, but close to a month. You basically spent overbought. So the idea behind that, what Cody just pointed out, was it's kind of a warning sign if you're short, right? Because it's basically implying that the market's getting a little bit ahead of itself to the downside, and that if you are short, you may want to consider doing something about it. Buying calls. It doesn't say liquidate, but it's just basically saying, like, hey, like, this is getting a little bit dicey here. That could persist for an entire month. So the idea would be is that you would wait for that to basically cross back into, like, between in this range, and then start trending higher. That is a big warning, like, this downtrend has ended. But I do like the call out from you, because that is super interesting that you are starting to see signs of being oversold.
The only part that makes me nervous is if you go back to the 31st, which was last Thursday, I think it was. We went to the oversold, and then Friday had our rally, which brought us out of that. And then the past 2 days, today's Tuesday. So yesterday and today, we've just completely fallen off the face of the earth again. And we're still just into that oversold territory. How many times, to your point of getting down to $18.50, $18, how many other times can't we do this dance and still see a downward trend in December Class 3?
Some of this stuff does trade technically too. You want to be somewhat mindful of. So I think you can even call this a very short-term trend right here. If you use that recent bounce as like a point, you're starting to get into some points where it's getting to be a little dicey from the RSI standpoint, but you still haven't crossed like the major, what I would say like is a major downtrend there.
Yeah.
Right. Which is this big blue line right there. So to me, there's still room to go for December from like a technical standpoint. But to your point, there is signs from the secondary indicator market that says like you might want to think about pumping the brakes a little bit. There's some mixed signals. I mean, like I said, if you're selling D's, you're selling a discount, but people, they don't seem to have an issue with it. Volume, price keeps moving.
And let's be honest, the next couple of days, as we get through this presidential election, the volatility is going to pick up.
Sure. Oh, for sure. There's no two ways about it. We've seen how these elections, I mean, obviously, any sort of large macroeconomic event can impact these markets. We'll see. But it's like as cheese continues to break, assuming we're right about the, that piece about that gap being filled, you'd want to be a seller of December here.
Yeah.
And especially like you get any kind of bump back up, maybe seems like we're due for some sort of like slight retracement. How many days in a row have we been lower, right? So you can go back to just right here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So gosh, like 11 out of the last like 13 plus sessions. It's the majority of them have been lower.
Right.
So it seems like you're due for a little bit of a popper, but probably a popper to be sold at this point. I know how much you hate to hear that. You're just dying to buy something.
It's like old age. It's hard from going bullish to bearish.
Just like old. You're not even old enough to be president. Get out of here with that. I can't vote for you this year.
One more year.
All right. So something you may want to be bullish about. Beans. What do you think here?
This is a request. Our good friend, Wisco Phil.
Asked about beans. Super interesting here.
If you're asking if I'm a buyer or a seller of Jan beans right now, I am a seller.
You're a seller.
Sorry. I'm going full bear on this one. I look at just going back to what you said about spot cheese. This is the best that the bulls could do. Look at the past 3 trading days. This is the best that the bulls could do. We could not keep and continue the momentum higher on the close. I feel like beans are going to fall out of bed here soon. Trading sub 975.
I'm going to take the other side of what you just said. I would be a buyer. My reasons for wanting to be a buyer here and now are, I think, when you look at it from a risk reward standpoint, this is where you're wrong. Call it 975, right? And the last time we tried to get down there, we couldn't even get a single close sustained there, right? So here's 979 promptly in your face. So we did not test this, and now you're starting to kind of claw your way out of it in a very, very small pennant.
Yes.
These 3 bars, the way these are taking shape, are a prelude to volatility, right? But going back to our RSI commentary, you have this bounce supplemented with a failure to get back down there, and now this is starting to trend higher. You've cleared this right here, and now you're moving up. To me, that's a sign of strength. So I feel like this is going to turn into one big W, and 1075 is in the cards, which would only be a 30% retracement of going from 1240 to 975. So, like I said, I'm going to take the other side of you and say, I like the trade just because, again, you're buying it here. Where are we right now? $10? $10.
Yep.
Your risk is down to 975. I think your reward potential is another 75 cents. That's a 3-to-1 shot.
Yep.
And again, the risk reward I like, but also too, again, it looks like a W's turn to form. The secondary stuff.
I was going to say the long-term W, I could see where the bullishness would come out of there. The prelude to volatility, I feel like is going to be to the downside. And when they get after beans, they're going to really move this price.
Fair enough.
So
this is how trading happens, though. You get a buyer and a seller that match themselves up. Did you know that?
Nobody has to be mean about it. We can be on differing sides and still have
that works.
Exactly.
How about that? You're just wrong. What? Anyways. No, this is a super interesting one. And
the weekly?
Yeah, that's the weekly.
Okay.
So this kind of goes back to the idea that that 975 area is just it's dicey. So does the W complete itself, or do we keep going down? I don't know. We know which way Cody wants to go. We know which way I want to go. I will say too, what could be an interesting little trade. Let's go take a quick peek. What I really like about some of this stuff too is that the options, I just grabbed a chart at random here. The options themselves chart really well. So this is the Jan Beans 1080 call. I picked 1080 because it's roughly around that 1070, 1075 price. And, some of the option premium, I don't know how much it agrees with me wanting to be long, right? But at least if you wanted to take more of a conservative approach and say when was the last time this was a 50 delta option? Right around September, right? And so if you subscribe to the idea that this will once again kind of trade roughly at the same premium, that option goes to call it 35.41 cents per bushel, right? And so if you're buying it today, you're paying, call it 6 cents. Your max risk is, if you believe in the idea of just puking them should it trade low, call it 3.5 cents. So add in a little bit of slippage. You're paying 6, selling 3.5. That's 2.5 cents worth of risk to potentially make, take us back to where we were before, which is in the 40s. So a little bit more of a conservative approach would be to say, let's just buy some out of the money calls. And, once the delta starts to pick up as you get closer, obviously, to, being an out the money option, but bending an arm and a leg, nor are you risking an arm and a leg. So this could be another approach. Who knows?
It could be.
But what's neat about, like I said, something to be mindful of is when you're looking at some of the underlying is how some of the options are charting too, because that also plays a role, right? What's paper doing? Are they paying up to get call spot, for example, at this level? Or are they not? Are they paying up to get put spot?
Yeah.
That's the other one. Let's just go take a quick little peek ski at
a tertiary chart, not necessarily secondary.
Yeah. So
tertiary.
There you go, tertiary. So this is a daily of the Jan Beans. Let's, what? There we go. That's going to have more. The 960 strike's going to have more. So what do you think of this? Are you a buyer or seller of this chart?
Oh, I am a seller of that chart.
This is the Jan Beans 960 put.
See, you got me. Yeah, I'd be a seller of that chart.
How about that? So next time when you're looking at some of these underlines, I like to look at like charts that have somewhat of a delta to them, but not like a 50 delta chart or a 50 delta option is likely just going to look a lot more like the underline.
Mhm.
But here, I think you start to get some of the thought process around like what are people doing to insure themselves against a move away from like the current price level.
Next week, we got to revisit this.
Write that down.
Write this down.
How come you're not? So like you got 2 stickers, but you're not even wearing one.
I'll wear them when I go back for it. I'm
like right here.
Yeah. All right. Well, Phil, we appreciate you calling, requesting in.
Phil.
Andy and I are on differing sides of that chart, which is perfectly fine. It's all right. We're going to check it out next week, see where we stand. A big shout out to Paige and Lexi for helping us get through yet another Tech Talk, working their magic on their side. Andy and I will be back with you in exactly a week. Have a great weekend, an even better week. We'll see you on the next Tech Talk.
Feel it.